I want to welcome Mart Wohlbert to the show. He is the writer of the Contrarian Codex newsletter, and he's going to help guide us through the roller coaster ride that is the uranium and commodity space. Welcome, Mart.
Roller coaster ride indeed. Thank you for having me, Elliot.
Yeah, it is a roller coaster because in 2021, you and lots of other uranium experts and analysts were proven correct, right? Like we had a real fundamentally driven bull market. And now everyone who got excited by that is seeing this dip and they're like, what the heck? I thought we had bullish fundamentals. So the first question is, why do you believe this dip is taking place in the uranium space?
That's a very good question. And we still have, just to clear any uncertainty, we still have all those bullish fundamentals that we had in 2021, and those will keep being built upon in 2022. So why do we have this dip? Well, let's start with where it all started. It started with a massive rally where equities just went up to 3, 4, 5, 10x, depending on what equity you're looking at. And what you saw is just a massive run up to start 2020 with. You saw a consolidation into August of last year. And after that, you saw the Sprott Physical Uranium Trust really making its mark on this uranium space. And you saw equities take off on the back of that once again into October, November. After that, we saw what we saw in the last bull market on several occasions. We saw a 30 to 50% drawdown for some equities, even more. So what we saw is a completely natural reaction, but it was further exacerbated by broad equities weakness, because as uranium equities entered this correction phase, because nothing goes up in a straight line, no matter how bullish the fundamentals are, we saw the broad equities market rolling over as well. And this caused more selling pressure on already correction state uranium sector. And what we saw now is that we are, I think, coming near the end of this correction. We see the broad equities market, we see selling pressure ease. I think that we're very close to a turnaround in the broad equities market and a snapback rally. And I think that will release some selling pressure. But for those people that are worried about, all right, but uranium has all these great fundamentals to back this bull market, and why are we not decoupling from broad equities market? Well, it's really not that simple. I think that we still have several months to go before we see a firm decoupling for various reasons. But right now what we saw is a big correction, and I can imagine that people, especially those who bought in around October and November of last year near the highs, are extremely frustrated. And that's completely understandable, because losing 30 to 50% of your position when you just bought into a new sector, it's a gut punch. There's not really any other way to describe it. So what I would say to those people is go back to the fundamentals, which we are going to discuss in this video as well. So I hope that helps. Go back to the fundamentals, really do proper company research. And when you've done that, I guarantee you will be looking at this sector like, all right, this is nothing short of a buying opportunity. And again, I get that people are quite frankly sick and tired of hearing the word buying opportunity after we've had this much of a correction. But this happened in the last bull market as well. And that proved to be a buying opportunity with all the fundamentals that are currently in place. I think that when we look back in December of this year, at the end of this year, that we look back on this current period as nothing short of, once again, a buying opportunity.
Absolutely. I totally agree with that. So, and even if you have the strongest fundamental asset, nothing goes up in a straight line. And that's just how markets work. There's always fluctuations. But I guess most people aren't used to that, and that's understandable. So I guess the real big question here is, why is it a buying opportunity? What are you watching to give you that sort of confidence in the uranium space?
Well, in a very basic sense, the uranium bull market is based upon solid supply and demand fundamentals. So what we see right now is, in a very basic sense, the broad market, or actually broad public perception, even though it's changing, is still seemingly shifted towards the focus that nuclear energy is a dying energy source, and nothing could be further from true. We have over 400 reactors currently operable in the world. We have 51 under construction. We have 102 planned, and over 300 are proposed. I will say the caveat to that is that most of those numbers are made up in the East. So China, for example, is planning to build 150 new reactors within the coming 15 to 16 years. This will be 67.5 million pounds of uranium, of added uranium demand that will come into the market. But it doesn't mean that in the West, we are closing all our nuclear power plants, barring Germany, sadly. But for example, France has, as in the past few years, has said, all right, we are keeping our fleet online and we are moving that date, or that phase out date, from 2025 to 2035. That has added a lot of security of demand. We've also, in the US, we've seen Byron and Dresden, the power plants in Illinois, being saved. That's 3 million pounds a year for the next 20 years of added demand. So these life extensions, combined with all the nuclear power plants that are currently being built or proposed to be built, will add a lot of demand. So then you get to the supply side, which the equilibrium price levels that most people used in the past few years, including me, was around between $55 and $65. That was like the equilibrium price level that most people accepted as, all right, this is the price target that we roughly have to reach before we have to look forward to see, all right, where do we go from here? Right now, however, with inflation and supply chain issues and a host of other factors as well, we see that this equilibrium price level is not between $55 and $65 anymore, in my opinion. I think it's closer to $75 or $80. And the longer this continues, the more that this will keep growing. And right now, at these price levels, there is little to no new supply coming online. We have some sequestered mines, such as Langer Heinrich in Namibia, Boss Energy's Honeymoon project in Australia, and the big one in the room, McCarver River, courtesy of Cameco in Canada. But those sequestered mines, they need security. They need that price, security of price, and they need to have these end users come into the market, to come into the term market, to sign contracts so that that supply has a place to go. So what we see is very basic numbers. Between now and 2030, there is approximately 700 million pounds of uncovered demand. And that will need to be covered in the coming years as we enter a new contracting cycle. We were already seeing utilities entering the term market. We're seeing off-market conversations happening. And slowly but surely, this trickle of negotiations and activity in the term market will turn into a river as it currently stands. So that is definitely something to watch. And I think 2022 as well as 2023 will be the years that river is formed.
Yeah, that's so interesting. I'm glad to have you on to dig into the supply demand fundamentals, because that's kind of the unknown space here and what this whole thesis is built on. So one thing you brought up, you said that the Illinois reactor, when it stays online, is going to be 3 million pounds. Is that about how much per year these big reactors use? 3 million?
A 1 gigawatt reactor usually uses approximately 400,000 to 500,000 pounds of uranium a year. Mm-hmm. So, but Byron and Dresden these power plants are larger because there are multiple units. And that is that roughly translates to 3 million pounds a year for the combined units that make up the Byron and Dresden nuclear power plants.
That's just good to know, because whenever you hear of a plant coming online, you now know what the impact in the market will be in terms of pounds. So really useful. So there's all this future demand coming online. We have not had really any increased output of uranium supply for years, pretty much since the big destruction back in the early 2000s. And so now I guess we're just eating up that supply with stuff like Sprott and Yellowcake and some of these other Wall Street vehicles. Are they taking it off the market?
Yeah, they're definitely having a big influence. Sprott is the biggest, like most visible influence. They have purchased 25.7 million pounds right now since they activated that ATM facility near the end of last year, and that is an absolutely significant amount. I just talked about McArthur River. McArthur River at full capacity produces roughly 18 million pounds of uranium a year, if I remember correctly. So they have bought up more than what McArthur River will produce in an entire year. Those are significant amounts, and they are not planning to stop anytime soon. And with other financial players already in the market, besides Yellowcake, which is also purchasing physical uranium, and the new ANU fund from Kazakhstan, which Kazatomprom started with a small investment in. This fund actually gives investors in the Middle East and Asia the ability to also invest into a physical uranium fund with a bit of the same properties, if Kazatomprom is to believe, with a bit of the same properties as the Sprott Physical Uranium Trust has. So what we see is these financial players, also besides the three that I just mentioned, we see these financial players coming into the market, taking a real interest and buying up physical pounds of uranium. Now, these physical pounds of uranium, they are, especially in the case of the Sprott Physical Uranium Trust, they are not an overhang on the market. They will not be dumped on this market if the price reaches triple digits. So that's a bear case that I've seen floating around sometimes. I've actually interviewed John Chiampaglia for the Codex, and he very much insisted on the fact that these pounds are sequestered supplies. It's almost like they're an end user. So that's not an overhang that investors should be worrying about. Now, one thing that we can look forward to further enhance the stacking, so to speak, the stacking capabilities of the Sprott Physical Uranium Trust is that they are currently trying to get a New York Stock Exchange listing. That will probably be Q3 or Q4 this year if that happens. And if that happens, that will have significant implications for this market. Why? Because it will do several things. First of all, there is such a large amount of capital available on the US markets, way more than is available on Canadian markets. And with a New York Stock Exchange listing, a lot of that capital will be able to come in and buy the Sprott Physical Uranium Trust in US dollars. So it will make it more attractive as a way to play this uranium bull market. Second one is it will make the vehicle likely a lot more liquid. So this large amount of capital that wants to come in, they want a liquid way to play this vehicle. They don't want a sub $100 million market cap junior that they can't really get in and out of because it's not nearly liquid enough. This is the perfect vehicle to have a quote unquote safe way to play this uranium bull market. Nothing is ever certain, of course, but it's certainly setting up to be a safe investment for uranium. So that makes this a very, very important potential catalyst. And Sprott has indicated that they're already talking to family offices and other large financial players that could potentially come in on the back of this New York Stock Exchange listing. And the implications that, as I alluded to, this could have is a lot more stacking of physical uranium.
Wow. Hey, you're right on saying it's potentially a buying opportunity because I love hearing the math. So you're saying MacArthur produces 18 million, Sprott just bought 25 million. So MacArthur's entire output is pretty much gone for the year, and we already had a tight supply situation. So
theoretically speaking, of course.
Right. So it's like the screws are getting tighter and tighter and tighter. And so the question here is, with all this bullish news, like we hear in the United States, the Biden administration bullish uranium, like you said, France keeping it online, Japan restarting the reactors, all this stuff all around the world, Europe calling uranium a green energy source, Netherlands. So when does that demand start to have an impact on this tight supply market? Like, when does that really start to squeeze the market even further? Because I think that's probably what people are waiting for as well, right?
Oh, it certainly has had an impact, and it will continue to have an impact. How big will this impact be? That remains to be seen, to be fair, but the impact will be there nonetheless. You already alluded to the EU taxonomy that will label nuclear and gas as green energy sources, which will open the door for ESG capital to come in as well. And opening this door, I don't think a lot of people realize how big this proverbial door is, because in Europe, there's approximately $1.4 billion, or 1.4 billion, sorry, $1.4 trillion of ESG capital that is available as approximately 11% of total assets under management in Europe. And this will now be, well, not all of it, of course, that would be ridiculous, but a part of that will be available to invest into the sector, into the nuclear power sector, and that will have an effect. What it will also have is all this positive political sentiment towards and the geopolitical support for nuclear power. It will also hopefully change public sentiment even more. And people will realize, all right, if we see all this nuclear power, if we see all this support for this green baseload power source, there must be a way to invest in it. And what people will come to the conclusion of is that, all right, we can't really physically invest into building a nuclear power plant or buying a part of a power plant. So we go to the source, we go to uranium. And that is when they will find, hopefully, things like this video or things like other great research pieces that can be found on the internet. And that is hopefully when they will see the opportunity as well. I will say that I think that the quote, the thesis will be most attractive at the top, which was told to me by a good friend of mine, Nick Jones, on Twitter, after I had a conversation with him. And that is, I quote that because it's so true. The thesis will be most compelling at the top. So all these catalysts, they will build up into what potentially shaping up to be a potential price spike into the price of uranium in the coming 1 to 2 years. And when we are at or near the top of that price spike, all these bullish fundamentals will look absolutely great. But that is probably the time to take some, if not all, risk off of the table. But right now, we're still building up to that point. And I think that, are we still in the first inning? No, we're definitely not still in the first inning, but we still have plenty of ways to go. And personally, I have a price target for the price of uranium of at least double what it is right now within the next 12 months.
Wow. So you see kind of the supply crunch materializing within 12 months.
And the long-term contracting picking up again. Term market activity will be a very large drive. People often focus on the spot market because that's the most visible part of the market, but the term market is actually the market that you want to focus on. That's where most of the activity takes place, and that's where most of the price discovery will happen. So yes, the supply crunch and term market activity will certainly really help creating this upward trajectory for the price of uranium, as well as the underlying equities as well.
Right, and the market doesn't realize this at all, really. The broader Wall Street complex does not realize, I don't think, what we're talking about, because obviously the bull market in 2021 caught them by complete surprise, right?
Yeah.
Sprott just, shocked everyone. And so what's happening now is just a collapse in the stocks, purely macroeconomic driven, right? I mean, just rates and stuff like that.
Yeah.
And so all these assets are just super depressed right now. And so given these bullish fundamentals, you're saying there's a big kind of divergence between fundamentals and price action.
Absolutely. Right? And I think that that the amount of capital that could potentially come in will also be fundamentally backed by what I think will be a great rotation from overvalued tech that has been in a 10-year and over a decade-long bull market into more value-orientated energy and commodity spectrum. So we have seen, I wouldn't say we've seen a real bear market in uranium, but with things like oil, which was still high in 2014, but has slumped after that. And we've seen a drought of capex in that sector as well. We've seen a drought of capex in, for example, the gold and silver equities. So those are the energy and commodity spectrum. I think this year will mark the year that the capital will rotate towards that part of the market. And uranium is very much that part of the market as well. So once we see the rotation, after either this correction, but I do think that we still have a last hurrah, so to speak, for these speculative tech stocks before we see a big correction, potentially in a few months, could be somewhere like June, July, somewhere around the middle of this year. If we see that, I think that a lot of these speculative tech names won't recover the way that some people expect them to. And a lot of the capital will seek new opportunities elsewhere in the aforementioned energy and commodities parts of the market.
Yeah, and like you're one of the few people saying that, because if you actually just focus on the establishment media, you hear people saying oil's dead.
Yeah, that's crazy.
Like, yeah, they're going to figure out solar battery technology and energy storage for renewables like this year. And just over time, just fossil fuels and other assets are just going to fade away because renewables are just going to take over, and exponential age technology, AI, robotics. And it's just, they've been wrong for so long. And like, that's part of the inflation is transitory narrative, right? Deflationary pressures are much stronger than inflationary pressures, but you're on the opposite. And your camp, you, Trader Ferg, the other guys have been right all through 2021, believing that this is going to extend further, this inflation story.
Yeah, exactly. And I think that the real potential outperformance for ROI for your portfolio can be found in trying to find the places where the market, but the broad equities market or the broad public is quote unquote wrong, because they're looking at, all right, renewables will take over everything. Oil and coal and natural gas are all going to be dead. Nuclear power is dead, things like that. And you need to take, at that point, you need to take the other side of it to see, all right, is that really the case? And if it isn't, you can often find some real opportunities there. This is reason why I focus, not just my main focus on the codex is on uranium, but I focus on all these kinds of contrarian, if you will, investment opportunities. And right now, what is seems to be the most contrarian is the natural resource space. And that is where you can find the start of what I think will be a great bull market for the coming 1, 2, 3 years with exponential return potential. And yeah, I think that you put it very well, that the broad financial media is focusing still on what has been in the bull markets for the past decade, and they're not necessarily focusing on what will be in the bull market ahead. So recency bias can be a real killer of potential return on investment for one's portfolio. So try to cut that recency bias out and look forward into, all right, we've seen this decade-long tech bull market. Where do we go from here now? Where is this rotation going to go? And try to cut out all that broad financial media noise and make sure to also do a lot of your own research to build that conviction on what is still to come.
Absolutely. I think you're spot on, because it is recency bias. And you see all these people piling on to the exponential age thesis, saying that, yeah, like all these technologies are going to converge. We have AI, we have robotics, we have all this stuff, blockchain, but it's like, it's been priced into the market almost at this point. Like, have you seen the chart of the NASDAQ? It's just straight up, and people got in really late to the game in 2021, but you had people like you saying, no, like inflation is happening. It's, and it just keeps catching everyone by surprise, the inflation narrative. So do you still see kind of continuing upside there with oil spiking, and in tandem with oil, uranium spiking?
I absolutely do. I think there is way more upside potential left on the table. I think that given, specifically for oil, given the fundamentals that are currently in place, combined with the amount of capital that could come in as they rotate out of overvalued tech equities, I think that we could see all-time high oil prices within the next 2 to 3 years. And that won't necessarily be very good for economic growth, because high energy prices are usually followed by economic downturns. So I think that the coming few years will be very good for that part of the market. I also think that gold and silver, given the inflationary monetary issues that we currently experience, I think gold and silver will do very, very well in 2022. I think that after this nearly 18-month correction is over, I think that they will absolutely bust out of those correction stages and make new all-time highs as well. So yeah, I think that is where the real opportunity can be found. And I think that even though they have kind of shifted away from that inflation is transitory narrative, I think that once it cools down, maybe even a bit, I think it could heat up right back again. And I would not be surprised. And I don't like saying this because I'm not, even though it can be good for the investments, it's not necessarily very, very positive for the economic situation of countries around the world. But I think that we could see triple-digit inflation at some point again in the coming few years. So it's better to try and be prepared for that right now. But things like the energy crisis that we've seen over the past few months and the food crisis that we could potentially see from the summer months onwards into the winter of 2022 will be signs of things to come.
Yeah, totally spot on. I love hearing the contrarian side, because most people you talk to, if I come across on the internet, are just super negative and pessimistic when the charts are down for 18 months, like you said, but you're still optimistic. And that is always like refreshing because it's so important in investing. So then just to bring it back to uranium, like you're saying, oil is going to spike. And to me, that's bullish uranium, isn't it? When fossil fuels spike, because now all of a sudden uranium is called a green energy. So renewables aren't working. Let's pump money into it. Is that bullish long-term?
I think that definitely plays into it. I think it also plays into the energy is outperforming narrative, and that includes uranium as well. So yeah, I think that as coal and gas and oil prices, as these energy sources become ever more expensive because the loading costs of these coal and gas and oil plants goes up exponentially, I think that nuclear power becomes more cost competitive. And I think that that takes away one of the bear case that is often cited as, all right, nuclear power is not cost competitive, so we better not build any nuclear power plants. But that bear argument goes out of the window. And what you're left with is just the fact that nuclear power simply and categorically has to be part of the solution. So once people realize that, and once it's firmly implemented as part of the solution in the West as well as in the East, that is when you will see a real shift in narrative.
Just to kind of summarize here, you have an energy crisis, which is driving people into nuclear energy, which is kind of like the only place that they can turn at this point. Some people are trying natural gas, though, right, as kind of maybe a transitory source, but still that's spiking, and uranium does seem to be kind of the place where this money is going to funnel to. So you have massive demand, serious government support, but also very, very depressed, tight supply. It's been that way for years. And stocks that are completely depressed and have been crashing for the last few months and just totally undervalued at this point. Is that kind of the thesis?
Basically, I think that in my admittedly very biased view, as someone who has a Twitter handle called Yellow Bull 11, like I'm very biased for uranium. This should be clear, but I can honestly tell you that after all the research that I've done and constantly trying to challenge myself in the fees, constantly trying to tell, okay, where could I be wrong? What could go wrong? What things do I need to take into account? I can firmly say that there are a lot of great fundamentals for various commodities and the energy spectrum, but nothing really compares to uranium, in my opinion. I think that is where the real, especially right now after this massive correction that we've just had, that is where the real opportunity for outperformance can be found in the coming 1, 2, 3 years.
Well, thank you so much for stopping by. Like, where can people go to stay on top of your updates and get your analysis?
Thank you for having me. And I think that people can go to my Twitter handle, Yellowbull11, if they want to reach me somewhere else. They can send me an email on contrariancodex@gmail.com. If they want to have a sample newsletter of what I do on the Codex, I will send them one. And on the Codex, where I spend my full time, it's where I do my research, where I write that bi-weekly newsletter. It's where I interview company CEOs, as well as doing company analysis, doing sector analysis of other sectors besides uranium, as well as precious metals, oil services, things like that. And if they want to join an ever-growing Discord community where we also have a lot of fun. So that is where I focus most of my attention on the Contrarian Codex.
This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky and you can lose lots of money in them.